few trading sessions, we've seen the FMCG stocks bounce back a little, and that's primarily because we've seen a few showers of rain across the country. So the delayed monsoon has finally arrived. Today, some bit of profit taking, but the important part is, are we going to see any change in demand sentiment or not is the big question. So let's get in Mayank Shah, who's the senior category head at Parle Products now, to discuss what the consumer outlook for the remainder of this year looks like. Mayank, thank you so much for joining in. Always a pleasure speaking with you. That is the real big question right now. What exactly is the demand situation like right now? How have you seen it pan in the first quarter of this year so far? And what does it look like going forward?
As far as this particular year is concerned, we've seen a revival of demand happening in the rural, which is very heartening. And as you rightly said, I think, although delayed, but monsoon has set in. And in the last few days, if you look at, I think, the deficit has gone down considerably. So today, if we talk about the monsoon deficit, at all India level, it's almost about, 28%, much lower than what it was a week back. Not just that, I think, it's also wide. If we talk about the onset of monsoon, it's widespread. So if we talk about the northwest part of India, I think, there's already onset of monsoon. States like Gujarat, Rajasthan, Haryana, and even Punjab, seeing showers and onset of monsoon. I think the only concern right now is a bit of central India and southern India. Even the northern part, as in, the Uttaranchal, UP and Bihar have seen, monsoon setting in. So that way, I think it's heartening. We've seen revival of rural demand, as I shared earlier. If we look at this quarter, the first 2 months have been really good as far as rural demand is concerned. And with a bumper Rabi crop and good realization, especially of major Rabi crop like wheat, even the government has raised MSPs. With all those things very positively impacting the consumer sentiment and rural demand, we are very hopeful that as we go forward, we'll further see rural demand strengthening.
Okay, so the green shoots in rural demand, at least you've seen it in Q1, you expect it to continue as well. Is this happening in urban demand and premium products as well, Mayank? And if you can give us some sense of how much did you grow by in terms of volumes and pricing in Q1 and compare it with the industry?
Yeah, so if we talk about the category has grown by almost about 2 to 3% in terms of volumes. In terms of value, because there were price hikes which happened last year, the category has grown by almost about 14 to 15% in terms of value. So about 14-15% growth over first 2 months of last year, which is very heartening. And I'm talking about urban plus rural. Urban is a little higher when we talk about rural, a little lower than that, but more or less now both of them converging. And going forward, we see both, urban and the rural demand to remain strong for the coming quarter to almost 6 months.
And have you grown faster than the industry?
Yeah, we are growing at a little, higher rate than that of industry in terms of volumes. About 150 basis point higher than that of category in terms of volume, and in terms of value, almost about 400 to 500 basis point higher than that of the category.
So basically, you've grown about 4.5% in terms of volume in the first quarter so far, with 20% value growth coming in, right?
Yeah.
Perfect. And how has the raw material basket played out so far? I mean, palm oil prices have declined from the peak. Sugar prices, however, are still higher. Wheat largely flattish. So on a net portfolio level, how has raw material basket been for you?
As far as the input cost is concerned, I think it's down compared to the last year. So palm has been down. Wheat has gone up a little bit. So we've seen about 6 to 7% increase in wheat flour prices. Sugar is a tad higher. But I think if we consider the correction in palm, I think the total input basket is down compared to last year by almost about 7 to 8%. And as a result of that, what we've seen is that quite a few companies are passing on that benefit to consumers. So this quarter, partly also the revival in demand is driven by the reduction in prices, either directly, I mean, mostly all big packs see reduction in price or some sort of promotion happening so that, the effective price goes down for the consumer. In smaller packs, you typically see some sort of promo where consumers get a little bit of extra weight. So both ways, consumers are gaining. I think either, by reduction in the selling price of bigger packs or in smaller packs where it's difficult to change the price, you see some sort of promotion or extra weight given in the packs.
So, Mayank, the other, I would say, factor that's playing out in the industry is increased competition also, right? So, we are seeing impact of newer players like Reliance Industries entering the business from the already existing players as well, the likes of Britannia and ITC. How is it looking right now? And when we are talking about price cuts being passed on to the customers, is there a price war, do you think, that will happen in the industry because of more competition?
I wouldn't really, put it as a price war because I think it's more about a healthy market. So if companies had taken, let's say price hikes last year when the input cost was high, in fact, it was steep. I mean, palm went almost to 170 rupees, 165, 170 rupees a kg. From there, it's come down to almost about 95 rupees. Hence, it was imminent that companies should pass back that benefit to consumers, and they are doing so. Competition is such that it would not allow you to pocket the increase in, or rather, the reduction in input cost and your increase in prices fully if it's not rightfully due. So, which is good. I think it's a very healthy competition that way. I would not put it as price war, but I would put it as a market equilibrium that would take care of your share based on what is the value that you are offering, and you cannot unreasonably or unduly charge a premium if it's not rightfully due.
Right. So, because you are a private company and you do not give numbers, just wanted to understand from your end of things, typically, what are the kind of margins that you operate in? How was it pre the massive inflation that we saw? How much did it dip to during the inflationary periods? And now with this 7 to 8% cut in your raw material basket, what are the margins we're looking at with the cost savings that you've seen or discovered during COVID times?
So ideally, it would not be right to compare with COVID times because, during COVID times, what happened was the costs had gone down. So all your selling costs, your promotions and those things had gone down. So it would not be right to compare margins with COVID times. But typically what happens is when you talk about categories like biscuits, they are categories with very high volumes and relatively lower margins compared to probably personal products and stuff like that. So margins typically are in lower double digits. During COVID, there was almost about a 400, 500 basis point increase in margins because of lower costs. Also because of rationalization of your offerings. So most companies rationalized their offering and they were focusing or concentrating only on few offerings. And the system was, completely driven by efficiencies. So, wherever it's more efficient to produce, higher production that can be taken within least time with very limited resources, including labor, because there was a gap on number of people that you can have, it's strictly not comparable. But if you talk about,
Yeah. No. Okay. So, Mayank, what I also wanted to understand, since it is the election years in terms of state elections, 3 of them go for state elections, how does demand usually pan out in that case? Is there a difference? What has been your previous experience like?
So I think, except for a very minor blip prior to the election when, if we talk about biscuits as a category, which is consumed a little more, we don't really see major impact on consumption or demand as a result of elections. But yes, it works very positively for most companies because of the election year. You would not see volatility in prices, especially of the input cost. So if we talk about inputs like, let's say, wheat or, palm or for that matter, sugar, especially wheat and sugar, they would primarily be, taken care of. You won't see really huge volatility or increase in this commodities. primarily because of the election year. So in the run-up to the next Lok Sabha election, which is going to happen next year, at least this year you will not see huge volatility or huge increase in input prices of essentials like meat and sugar. So that augurs very positively for biscuit companies or food companies.
All right, that should be good news. No major change in input prices, and hope of gradual recovery in rural demand strengthening only further. Should be good for players like you. Thank you, Mayank, for joining in and giving us an outlook on the sector as a whole. But I'd love to have a conversation with you about Parle's own strategy and adjacencies going forward, but that conversation for another day.